Good morning, good afternoon. It's been a while since I did that tutorial, so this is going to be a quick but advanced one, and it's gonna be a little bit long. So ever since last payouts I got, I had accounts and do them, so this had affected my psychology, so I thought it takes some time off. Now coming back onto the markets, I want to try to do challenges without doing 500 accounts because I want to first not focus on the money but focus on the psychological part of it. Because now I know I have learned and the market moves. When the market moves, trust me, I will get involved. But if it doesn't move, then I'll get chopped around. Today's tutorial is going to be based on the concepts I've been telling you people to backtest, and this is going to be a deeper dive into each of them. Now, this is today's London session. Okay, as you can see, I took how many trades? My first trade was along here. Notice every time I take the trade, it moves. Effectively, I was targeting the Asia highs, and it failed, so it took me out. So this was my A plus sale, which I'm going to teach you today. Then again, I sold here, sold more here. This is demo, not your money. And this one, I was too early, but then the most right here. So this one today, let me see, I can put the execution. This is a demo account, not real money. Don't think this is money. This is for education. So if we are to look at that, I'm going to show you how you can exactly get the same trades. Look at, I'm explaining, I want you to observe what time I'm selling, what time I'm buying, okay? Because it's going to be so important. 2 a.m. opens here, I do nothing. This trade all this chaos. But I go wrong here. You notice when I go wrong, the market moves. It just misses my notification. I wanted to target this daily rejection block on daily time frame. It failed. Immediately this failed, took me on at break even. I sold here, I sold more, I sold more. I took partials here, I sold more here, and I took partials here. This is 1 a.m. high, this is 1 a.m. low. 3 a.m. open, I did nothing. Look at all these claims. I would have added more, but why did I not add more sales? Why did I wait? I sold this kind of here. Notice when I'm into the market. Zero drawdown. However, this one I was targeting this low of this rivalry gap. This is on the 1 time, but this I sold here. The rule is when we break this low, we go break even. So I want to break even. I'm selling there. So I waited. I didn't buy it, but this was a nice. After we take the 1 a.m. lows, I have a good kind of risk there with reaction, but I didn't buy. Now notice they sell more. They sell. Now this one takes me out. This is the loss I made, but I have break even trade. And then notice how I stayed out. Why was I able to tell? It is what I'm going to tell you today. Now notice here, immediately I sold zero drawdown profits. Was done. So this is the demo account. My target was 1,500 target. Now I am telling more. If I was still active, I would have bought here. I would have sold here. Is what exactly I'm going to teach you. Let us look at that. Now this is only, let's go to yesterday and see what I did yesterday. I was still demonstrating trying to finalize myself first. Yesterday tilted. Also yesterday the market was high, that's what people say. Now let me show you what happened. I'm going to teach you all the things. So yesterday, all this London station, London station. Yeah, this is going to be an important lecture. You have to go and look through. So London station yesterday. Yes, I want you to observe something. Hmm? I showed here. I took here. About here, took passes, took method places. I stayed out. Why? But I'm gonna teach you. Now look at this point. This is 5N. We've just taken London height and then I sold here. Unfortunately, this one took me. I moved my stop loss to 5. I knew it was coming down. I sold more here. I sold this I could tell you what else. But it's kind of good. Now once we hold up level signature right here at 502 and watch today's price action at it. 5 at the effect that at 230 and you notice what you are seeing. Now, what do I want to teach you today? Let me see. My annotation. Some annotation here. This object here of step with path. Just here I go and put my things that I'm going to use to teach. Okay, fine. That is fine. Let us go to today. That is how I did today. Now, how? What is the lesson today? So I was thinking about yesterday's London step. Which I'm going to teach you today. If you have to see the proof that I executed. This is not replay. This is not what is the real data. But they executed in London here. I went out. Now coming to New York. I executed more here. I stop. Now, let's add that again. Notice when I bought here, we didn't went up. I saw this I was like, wow, this is good that I want. However, I made the mistake here, so I didn't get enough stocks and step up. I deleted it. What time did I buy? 5 minutes back. Equity times around 30 minutes. I bought more here, but the trend was actually just good. So around what time? 18 minutes. Now, there's a bit people complain about New York State. I don't know if it was me who are doing that so well. It so happened that I was so on point with that I don't know. So what happened yesterday is that I sold here, and executed right here. But I'm risking 100 to make $300 on each execution, but I keep adding. So when I see here one, now notice this order. I sold here. Hmm? Can you imagine zero drawdown? Hmm? This was yesterday New York AM session. I didn't buy this rate. Why? This is what I'm going to teach you. We reached here, we took out all the out of sell side 950 macro, we take and we have a market partnership, we have a gap, but I refuse to buy. What I'm going to teach you. Those days I was built. So I was scam created from here. Partial one, and one was taken out, then I entered the executed more. So I sold more here. Sold more here. So I'm gonna teach you today. I need to show you why, what was the logic behind it. Now here, I sold more here. Sold more here. And then we reached our new opening gap, but we executed because we took out that. Now here, I bought here. So buy Notice where I exited. Time-based setups. I told you, when I move at 11, by 11:30, you are out. So 11:30, I was out. So people were trying to buy the breakout here. As people were trying to buy that this is the breakout or is the breakout. Something I saw, I received a word that this is the best executed you are targeting design. You know, I was taking my profits. Now after here, I had done so well. I was like up $1,400 on the day. It's controlling my risks so well. Notice two micros, two micros, two contracts. That's true. They're not even excessive. But the trade is point. I felt invincible. Then I gave it up all most of it all. Now notice this. This was something new that I didn't plan. You see what is happening here? Smart money is accumulating wrong and they go up. Well, I left them at the diamond. But me, I short here, so I'm talking about at break even. Now this is when deals started coming in. Hmm? If I had done so well, I was supposed to stop. That taking out at break even, I short here. If I'm took me out, now how do you know tilt is coming in? It is when you flip bias. This was okay. The trade followed my order. It took me out. I was supposed to not start this chart. I remained on that executed. This one took me out. When it took me out, I bought. Now this is tilt. Took me out. Bought more, bought more, bought more, bought more. Yeah. Now I sold, took me out. I tilted again. I bought. I sold more. I knew this was going to take this low here. I knew it was going to take a big low. But because of tilt, I had tilted. I was not trusting myself. I was emotional. I was engaged, and this is why when you take a loss, when you stay away from the test, this why what 1 hour is enough. If I had stayed away from this test, I wouldn't have tilted. So I ended up giving up like $500 for the day. Then I just like this. One of the hardest things we struggle with as traders is tools. Now, this is yesterday's trading. So yesterday's breakfast, I think the other day when I was just coming onto the steps, now look at this page. 38 trade. Yes, they were 23, but there were four ideas, but I just kept on adding more. So yeah, so now this is what Tilde did. I was at $1,000 and I gave up most of the money yesterday. That is what we call Tilde. And I continued all this with that. What is killing my profits, what killing me. So we are going now to go on to what we have done today. Now, NQ, December concept. Now, beginning that day, I came on to the charts at around 1:20 a.m. and that time I saw that the overall we are bullish, but market is trapped in a range. This was Monday's trading, Tuesday's trading. Now, yesterday's trading, we took previous day's high and then we dropped lower. So going on to just having a bullish bias, I thought maybe today we are going to, because we were almost around here, didn't we? But maybe we'll reach this gap. So on the daily time frame, what I did was what ICT tried to do. So these annotations, this is how they come about. I label this gap, the new week opening gap, high and low. This fair value gap, I divide it into four. It includes midpoint building and field. Those details you can always go to ICT and it tells you all that. That is extra analysis. Like from this high to this high, I divide it into 4 quadrants. This is on the weekly time frame, and also did the same. How do I went on a weekly like this? But on the weekly time, I'm not interested in this flow, is a veteran flow. So the same thing using the fib on the daily. So this is for the important ones. Will not watch this part. This is where the logic begins. You don't just stay on 1 minute, not knowing where you are in on the higher time frame con. So going on to another session on a daily time frame, that was my analysis. So I had a 1 hour gap here, and I was like, only person who attempts to reach this gap or not, I don't know. I did not know. Who attempts to reach these rows after I remember I labeled how I managed. I labeled all these rows here. So I went to the 1 hour time frame. You're going to ignore my lines because they help me and they are guiding me to know when to trade and when not to trade. It's one thing learning how to trade, but then psychologically, that is when you master yourself. That's when you become really consistent. It is a tough journey. No one will tell you how to overcome it, but you will overcome it. Psychologically, you will tilt when you take a loss. Notice I was up $1,400, but then when I took one loss, I had to give back. One of the things you learn with the time as you master yourself. Now, notice that before this kind of content, this is 4 a.m., this is 3 a.m., this is 1 a.m. I want to remember our model is best for before 4 a.m., 2 a.m. prints. You want to mark the 1 a.m. highs and and I have always told you that before the market does any other business, this is the first thing the market had to deal with. It deals with the 2 a.m. lows or the highs. So it is up to you to determine what the market wants to do, when, and at what time. So those are things that the market will always do. I can show you example after example, example after example. If we miss the 1 a.m. lows like on this day, we have the 2 a.m. highs and lows. Notice how this broke this and then expanded. So, but that is for another day. Now today, 2 a.m. Now analysis I made is that we have this gap. I'm just going to draw this, but I'll move it. Now this is something you need to observe. If we have a fair value gap like this, okay, now this concept is so important. You have a fair value gap like this, and price action comes and fills it. Hmm? When price action fill this gap, we expect price action to go lower. If by any chance we close above this gap, that is bullish, you are going to go for longs until this. This concept alone is enough to help you determine the direction of buy. Now look at this. This is the gap. Now let us go to some other what? Some other gap. Let's see where. Uh, now the same concept here. Let us apply it on this gap. Sometimes we don't want the gap here. Now this is the primary gap. If this fills this gap and closes below, that is bearish. Notice how we fail to even reach midpoint. We fail and we start to display store. That is bearish for me. So we have all this liquidity resting below here. And today is a Thursday. Could be a bearish week. And tomorrow we'll get a TGIF Friday. We could take out all the lows resting below. Or we have done a lot of damage to the upside. We have a lot of liquidity resting below all these lows until this gap. We could have a bearish AM session today, but no news. There's no news. We don't know. but we don't care about bias. But we need it. Now, going on to the model itself, this is where everything starts to unfold. We will begin with today's trading. We are going on to 1 minute. I have labeled 1 a.m., 2, 3 with vertical lines. I drop down to 1 minute. And this is where you want to focus. Yeah, attention. Okay. And the model says that when we take the 1 a.m. highs, were they taken? Yes. And at this 1 a.m., we also had the Asia highs. Now notice how bias is unfolding. There is a very interesting story on yesterday's first action that I'm going to tell you. You're going to understand how this algorithm books price action. Notice that we had Asia highs here. 1 a.m. tried to take it shallow and then London took the highs and was coming for the lows. So price action was basically coming for these lows because of the gap we have up, and we literally failed to go and reach the midpoint. Having that in mind, like we are anticipating price to come and take these highs and then come for the 1 a.m. But can also reach the levels. We don't know if it will reach, but we anticipate. We don't know. Now let us put back our annotations for they will start this trading. Now start this trading. This is what I want you to find out every time you do the chat. Hmm? You have to write this down and you have to go and practice. If I told you to practice before, go back and because it will make meaning. Now, this is the minus calculation. This is 1 a.m. lows. These are 1 a.m. highs. Okay? This is minor buy side, as I'm gonna explain. So the first thing you do is you mark this 1 a.m. highs and 1 a.m. lows as buy stops and buy stops. What is the first thing? Now London opens at 2 a.m. 2 a.m. our kind of trading is very, very tricky. You have to know what you're doing to enter a trade at 2 a.m. If it is not activated in the first 5 minutes, if you're counting 1, 2, 3, 4, 5 candles and you have not moved any point, don't enter a trade at 2 a.m. Trust me, that alone will save you a lot of money. It will save you a lot of mental capital. It will save you a lot. In 5 minutes, what do I mean by a confirmation entry? You don't have your confirmation entry in the first 5 minutes. I have shared those confirmation entries before. How you can trade in the first 5 minutes. What do you do? You're going to wait for the market. You're going to label the opening price or the highest high if it just drops, and the lowest low in the first 10 minutes. You're doing nothing. In the first 10 minutes, you're doing nothing. But wait for market to take out either side. When we take out the low of the 2 a.m. in the first 10 minutes. Now, London 2 a.m. trading is very tricky. It will deceive traders that it is going to keep dropping. And ICT talks about this several times when it talks about time-based liquidity. I was at the chart today and I watched price action drop. Immediately to reverse. So if you are reacting to price, you're going to sell when you see this candle. If you react again, you're going to buy. So the first time you sell and make a loss, that is data. You're collecting data. Immediately you flip bias and you go long. Now that is formal. Now when you go long and the market drops, 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 Does not take you out, but again gives you another bullish candle, and you add more contracts. You over leverage. Now that is tilled. So London does those things. It induces FOMO, it induces tilt, and greed. Those are three things you have to know them, and they are printed in each candle. These ideas are printed in every candle that prints on the chart. AM opens, induce traders to go low because we have 1 AM lows, we have buy side, and we have also taken Asia highs at 1 AM. If traders are thinking, and we have a market structure shift, what saves you is there's no fair value gap. If you're impatient, don't sell. Not participating in anything that has no fair value gap. Just leave that way to go. But with what I'm telling you is that immediately after 10, you're going to observe that this market will drop or it will go up in the first 10 minutes. You're doing nothing. You know that it is a stop hand, hmm? Like it is a stop hand, not a continuation. You will know by the candles. They tell you the whole story. Now, notice this candle's body comes and drops. The next candle opens. So, as retailers are selling, they are selling to smart money buys. So, this is a signal that we have absorbed your orders. Smart money is absorbing orders. And where do smart money sell from? They sell above old highs. There is an old high here, Asia high. We have 1 AM high. Above order highs, they will absorb your order and then distribute it so they absorb people. Now, this is what happens. When 1 AM candle gives you the first two candles and they are bullish after 10 minutes, and you have this 1 AM high, like I have labeled, 2 AM high and 1 AM high. When the first 10 minutes, the highest and the lowest high, I want to note them. Now, this is important because going forward, I'm not going to over. I'm trying to explain price action in a choppy, and you're going to appreciate this when the market starts to move. When price takes out this slope, wait for two bullish candles and you can go long. And by the time you hit this 1 AM high, you should be break even. How do I mean? Go break even. If you hit this high here, because how does the candle print? This is what the candle prints. Opens, puts in a low, puts in a high, and then it can close. In this case, it opened, range, puts in a low. This could be high and then it again drops. So these are the dynamics of open, low, high, close. Now me, because of what I have seen London do and the watcher, I was confident to buy and knowing that we are going to leave this low with this low untouched until 230, 218, 220, 250. Rewind back those times. Go to the go to price action, go on the charts and observe what happens at 218 to 220, 20, 230, 250 in London session. If you do not have enough experience, do not trade the 2 a.m. candle. 2 a.m. candle is very tricky. Some days it moves, some days she doesn't want to be touched. So for 10 minutes, we will have price move up. Our target is this manner by side. If you there are those hyper scalpers who over leverage, they can take partials here. Someone can enter with 2 minis or 5 minis here and make over $3,000 by the time they reach here. But me, I'm a beginner, I'm still learning. So I use micros, I use two micros, keep adding my entries. So this is your entry to go along, and you want to be sure that because I was working now, those are the things which will affect you as a trading. I had FOMO. I said, "Oh, I need to take a trade." So that need to take a trade is so dangerous, so dangerous. I needed to take a trade, and I instead of because I was looking at P and F, I was not looking at my model. So I saw this kind of come, almost took me out. You know what? We have this high income. If this high was taken and this candle dropped here, I would close my position. But I held because I knew this high was failing. Now this one was taken out at break even. Now those are the things I'm always telling you. What do I mean? Let me show you. That market, the London session, 2 a.m. is very tricky. It will induce FOMO, tilt, and greed. So notice how I went long here, went long, went long, went long. I think this can took me out. I think I partially, I don't know what happened here. Then I went long, long, long. No, this one took me out. I think then I went long here. I took partials here, then I just closed, it wasn't moving anymore. Now that is the 2 a.m. candle. What saved my logic is what I'm telling you today. And I am telling you that you do not trade the 2 a.m. candle until you practice that. London will trick you into that it is going up. It will leave this low here. It will even leave relatively equal lows and lie to you. So I'm recording this video at it's now 8:30. It's coming to 8:30. That is yes, 8:30 New York time is when I'm still recording this video. Now, how do we know when to get in? You see this? Now this comes with your testing. I have literally told you back test in hindsight. Back test in hindsight, not this FX replay. No, no, no. Back test in hindsight. It will give you an understanding. Generally, you are observing. Notice this is 2:30. I told you in the beginning those times are so important. At 2:30, we take buy side. We put in a doji candle, we take an Asia highs, and we drop, putting in what? The next inversion never get. This one, this inversion never get. Same best inversion. What makes it even better? You can go short here, you can go short here. But for London, don't be harder. It will always give you a trade. Now look at this candle here. What did I tell you London does? It will make you doubt your strategy. It will make you freeze. It will make you, you know, it will bring out all your emotions. So me, when I saw this signature, now these are important sales signals. You want to take and get on these turning points. And immediately, because I waited for this kind of close, when this second kind of closed and I saw this gap, I was like, whatever. I went short. This candle came and mocked me. My stop loss was literally above here, and I was losing $400 if it had taken me out. You notice how we hit this gap. We don't give a dodgy candle or something, but what follows next is candle. It has no weight. It drops and closes below. Even if I am from sleeping, I will sell this market. Why? It is 2:30. I invested. It is 2:30. We have done or taken my side. We have minus sell side here. We have 1 a.m. lows here. We have Asia lows down here. I will sell this market. And I sold. I held, I added more here until this 1 a.m. was. Now, London itself is very tricky. It can come and reach here and reverse completely. I'm going to show you what happened yesterday. Now, that is the 2 a.m. model. We wait for tea time, wait for our signature, then we sell. Now, let me show you what happened yesterday. I told you yesterday at 5 a.m. Okay? At 5 a.m. yesterday, go to price action on your charts and go to 5 a.m. as of yesterday. And I want you to, these are the things that keep repeating. That when you see them, when you keep seeing them, they will get stuck in your mind. And when you master them, you start to see them and they will compound in your brain and feel like you've seen this before. You have seen this before. Now, I want you to notice our sales signature. Mhm. There's something I told you when I had just started. Now, the best inversion you'll ever get. eh? Now, this was yesterday's London session. If I am to, I need to have my ranges. Like I told you, 2 a.m. candle is very tricky. eh? Most times it will just continue growing, and then for you, you'll see this bullish candle and you think it will keep growing. No, the moment we break below this gap, I will go short. Notice how we put in this gap yesterday, and this candle rejected it. I was telling this is yesterday's London session. But what I want to show is the sales again. I said it is what? The best inversion you ever did is where when I see this after we have taken this is 4 a.m. high, we took the Asia highs, hmm? We've taken actually London highs because London is on ends at 4. We put in this gap. I told you to go to your chart and compare this signature with today's price action. Now, what does smart money do at turning point? It will deceive traders. I want you to observe this gap. You understand absorption of orders, then distribution. Okay. So what is essentially happening is that each candle is telling us a story. Each candle is telling us a story. But retailers are trying to buy. Hmm? They are pushing price up. From where? From here. They are buying. Retailers are trying. Smart money is absorbing their orders. Like we push up, let them panic. Like I'm drinking water and I let it in. Push it a little bit slowly down. Push up again. Like let's say you're drinking. Then you breathe out. Like, okay, let me compare it to breathing. Hmm? So it's like at this turning point, smart money is selling. Retailers are buying. That is what appearing. Now what happens is that smart money will always show their move intention and it will always happen time based. Like it is 5 a.m. I told you in the first 5 minutes you should have a confirmation entry if you want to sell in hand. Notice this is 1, 2, 3, 4, 5. When you time the markets, they will start you will start the them and they will not be random anymore because you will start the specific things happening at the specific time. After 5 minutes, I had now I want you to listen. If you have been following, remember what I told you. This is the lowest low at 5 a.m. According to our model, when we take previous hourly high and we drop below, we leave a gap, it means we are going to sell. Now, this is minor sell side here. Hmm? I told you you don't want to enter any trade within the first 10 minutes. Like, ignore whatever is happening here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Look at this. 9, 10 minutes. After 10 minutes, if this price action is below this gap, we had an old high just back. You can even see this signal that sell me. Hmm? Price action was literally telling you to sell. Now, I want you to study this fair value gap. It's the same concept I've just explained. I told you that if we have a fair value gap, hmm, and we are anticipating prices to go lower, price will not go down in a straight line. No, it will first deceive you, it will drop, it will make you doubt yourself, be in your pants, but it will drop. So me, I sold here yesterday, as you can see. My stop loss was just above this candle here. So we have a volume imbalance. Yes, I put more. And I was aiming for this low here. And also probably don't think we'll take these lows right now, but so because of my rule, they say when I take this low, I break even. So I was break even right here. I think around here. And then this candle just came and weakened me. Now I told you that when you have this gap, as you're going to see in detail, once we have this placement, now how does price action move? This is how it moves. If this market is going to dump down, it's going to give you a confirmation in the past 5 minutes. If we have confirmation in the past 5 minutes, expect at 10 minutes to see a retracement. Now, these retracements, I have named them a cleansing leg. Sometimes it is a candle, sometimes it is a swing high. So this is a cleansing leg. What does this cleansing leg do? Uh, a cleansing leg comes to take out over-leveraged sellers and to give a chance to smart money that had missed this sudden drop to come and add more orders. In simple case, this is what ICT calls uh, low risky sell. So the low risk sell is my cleansing leg. Like I will wait for a low risk sell to happen. Smart money sells it at low risk sell in a cleansing leg or candle. Once we close below this C bullish candle at 10 minutes, I will go in. But I already got in within 5 cycles. So once we have that, now there's what we call fast stage distribution. At 20 minutes, if this market has not reached a significant pool of liquidity, it will come up. In the 20 minutes, we'll take out, look for stop hands. So stop hands happen at 20 minutes. So you expect stop hands at 20th minute. It is not exactly 20, but expect a leg up at 20th minute. This leg up will turn into a complete reverse at 20 minutes. So we don't know. That is why we have a stop loss placement. Now, if this is a complete reverse, when this is happening at 20th minute, after actually at around, if this was a fast market, our take profit would be hit in 10 minutes. But if this is a slow market, observe a stop hand at 20th minute. And when the 20th minute happens, these are the things I need to I look out for. You're going to observe a gap up. If there is a gap down, good. Now this gap up, because now here is when you need to make decisions in case you have not entered the trade. You want to join the people on the table that are eating. So this was the graph down. Let me just change it color. This is the graph up. So we have a balanced price range. So the thing to ICT traders sometimes us ICT traders, we will buy anything without context. So when we look at this price action, this is the balanced price range. There's the leg down, there's the leg up. So you want to be very careful at this point, not to take trades at the 20th minute. If you were here and you're taking trade and it's coming to 315, you wait till after 20 minutes. Let the stop hand first get done. Now I will watch this kind of drop. Assuming I was bullish, I would expect this to be a cleansing candle, check out overlay these areas. And if I was bearish, I would expect something. If I was bearish, now the first again. So if now I'm going to observe what happens in this gap. Do I have rejection in this gap? No. And I'm observing what? Speed. I want to see speed, volume, and intention to go lower. Like I said in the beginning, I told you go back and see. I said if we have a gap and we fill it, the moment we close below, this is the reclaim, you don't know whatever they call it, but it will always support prices to go lower. Notice how this is a bigger gap. I'm focusing on this one, assuming I don't know anything. I'll wait for this gap. The moment we close below, notice how this one immediately stopped at this point, below this gap, and dropped lower. When we dropped lower, I had more contracts here, then more sales. Now, if I'm bringing the points, but uh, going on to back to our price actions again. Remember what I have just told you. The first 10 minutes of a new hourly candle, you're doing nothing. You're observing until you get something clear. If you are to go long or short, it should be within the past 5 minutes. After 5 minutes, you don't have a long or a short, don't start the market. Wait. Now, we have sold from 2. This move normally will reach at around 250, but they were in bearish, they just not and not and continue broken out. Now, the 3 a.m. candle opens. And I told you, London is very tricky. From here to here, people may think the market is going to continue dropping. I won't show how the 1 hour candle looks like. Um, London. Characteristics of London session. Very hard. So this is before, no, no, no. Yes, yes. This was the 2 a.m. So when we see this, so many people were wanting to join the sale in the silver bullet. That is why you have to have context, you have to have rules, because you cannot avoid the tilt, you cannot avoid revenge trading, you cannot avoid FOMO unless you have specific rules to prevent you from doing those things. That is what exactly I have been touching and working. I need to have specific rules to guide me on when to take a trade, when not to take a trade. It is the only way you will fight FOMO. I don't know you will fight tilt. Everyone tilts, everyone gets FOMO, even if you are how experienced It all goes down to risk management and having specific rules. Now, you look at price action. This is 3 a.m. candle. I told you the past 10 minutes, they are for observing. I told you if you don't have a fair value gap, don't touch that market. Okay? I open here at 3. What I did, I marked my opening price, my week, the highest high at 3. Whenever was strong here, 3. And most times, if this market has been dropping, expect the next candle, the next hourly candle to drop until at least 10 minutes for a replacement to occur at least 10 minutes. So when this happened, we just came up. Now, why did I sell here? I saw this candle. This candle opened here, it was bullish. The moment it is this place below, and it was 10 minutes, three. I have waited 5, this is 5 minutes. I have hit this inversion gap. Moment I saw this rejection candle, that is one. Remember I told you, townstone bell candle, second candle, and a third candle. With this huge rejection, I went in and went short. I saw close one just above here, and I was targeting this gap. There was a gap on 1 hour. And I was also looking at the gap on 1 hour. You want to just make it up. The next ones want to do it. So it took me out, like I said, the first 10 minutes. You see, on BSL here, I have observed these trades work out so much. Uh, if you only focus on like 3 hours, but sometimes I'm greedy because I'm resting less, so I think I need to improve that. I will risk like 100, so I'm thinking I can make 700. Yeah, I think like I make like 600. Then it came, it took me out here. So I told you that when we sell 10 minutes after the opening of the next hour, by the time we hit this low, we have to go break even because smart money is now taking profits. Notice the first candle hit this. Now notice this candle. There is no volume in this candle. There is no intention of smart money to continue dumping this pattern. Why? The candles are telling you the story that we are done. Smart money is offloading their shorts to willing buyers. Now the buyers keep coming in. Smart money is keeping it keeps pricing one specific range around this point so that they can absorb orders. Now there are people who are late sellers. They are happening after the stand. By this time, you take profit. Smart money will take orders and sell to you when they buy. At this point, it could be our model to go long. It is a valid trade. 100% sure once we do a stop and pass the bullish candles, you're in. You target this price tag. It is a valid trade. And even if you look it from this inversion, so what validates an inversion is the swing high inside an inversion. That for me is what validates my inversion. There is no swing high or there's no wick in the I noticed this, I saw this, and I was like, this is nice. But I couldn't participate in this leg higher because of this reaction of this gap. Me entering this trade meant that I could be break even by this point. So I let this one. Because I knew much better my price action may drop according to how it's been coming. Now when we put in this gap at 330, hmm, what is my key time of trading? This gap and this doji, I went short. Unapologetically, I was taken out. This was my first loss today. Notice when I was taken out, I didn't flip my bias. I can show you. When you're taken out and you flip your bias, that is common. When you add it to the position, that is tilt. So let me show you today. Uh, so I couldn't have long. Why did I long? That's the question you're asking. Why did you long? So I sold here, took me long. I ignored all this because I knew better that the moves happen at the end of the hour or at the beginning of the hour, or you stay out. Okay? Now, this is one thing you want to see is that this leg going up was efficiently balanced right there. Hmm? And I see that if procession is moving up, we are going to expect a cleansing leg. I was actually watching that we have a cleansing leg here happening. And if I am to buy, I'll buy after the past two bullish candle. But we have this gap. And we need more in a speed. We needed speed to pass through this gap. Hmm? Compare this gap with the gap we had, yeah, which was in the other chart. So there is no intention. So this retail, there's no smart money involved. So I'm like, no, I'm not staying in this shopping market. And I told you that when we fill this gap, eh, when the time we fill this fair value gap, that we go up, it's first to act about go below it. This place is below it. We are not returning to this part. Now, because we are taking liquidity, is what happened here. Smart money took buy side. Hmm? These are all signatures. And at this moment, I wrote that if the way we are moving is, should we close above this and this gap, then we are going to chop in sideways. That is the first action we don't touch. Now, should we close below this gap? This is what I wrote as market was quick. We sell till Asia lows. Now, notice 4 a.m. starts. I already have my ideas in mind. I'm anticipating that if we close above here, in 5 minutes, maybe with speed and momentum, we would make a run to these highs. Yes. The first candle is a dodge. It fails. Second is a benchmark. Ah, now should I seek volume? Intention. I will not hesitate to pull the trigger. My stop loss above this gap. That is exactly what I did right here. I sold here, exited here. I was done for the day. Now I want you to notice the times I'm selling. I want you to notice the times I'm exiting. And by the time I'm entering my this up, the market is moving. Now that is what you want to see in most of your trade. You don't want to enter a trade and it ranges. Now, this is something important about yesterday's question. Some things I have told you. Hmm? So many people lost money yesterday, but with what I have told you, the market made a lot of sense. That is what we want to do, right? Let's see Thursday's annotation. Yesterday was Wednesday. Wednesday's annotations. Hmm? I'm not saying the annotation. It's subject to. hiding easy. Oh, this is bad day. Happening because this one had was the idea of the things. Yeah, maybe I should refresh. Refresh maybe. Here, I didn't even save my journals. Trading view is becoming weird. My phones are not physical. Oh, something like what I'm listening. Complaining. Oh, it's a good one. Hmm. Hmm. I wonder overlook. Oh, right. John. Now I'll be. No, it's my day. No, I want you to please. I'll also not. No, no, don't get it. Things. It's okay. You don't want this to run. They want you to. They're hiding the algo. But if it's well, I'm going to show it to you for free. So these are notes you want to take. Okay? And these are notes and I never know get anything. So this is my journal. I'm not excited for this time. Now, this is what I'm thinking. You mark the highest high in the past 10 minutes. You don't have the company. The gap came up. This is the first. This is like cleansing leg. Check out the alibi. But I did. I was not interested because there was no volume in this one. Now here, at the 40th minute, with this gap, with the volume imbalance, these are things I'm watching going on. With the displacement, look at the speed with which you pull this gap to form a balanced price range. I'll go short. I think that a little bit higher than have held. Now, like I told you, if we don't reach the London lows, London is tricky. So it came now. This is 3 a.m. I told you what? To mark the highest high and the lowest low. What time? 3 a.m. Now this thing repeat. So this was where the long position was. This long time based exits at 3:30 you exit. Excuse me. So the highest high. If this thing is trading down, it will drop here at least 5 minutes or 10 minutes. At 10 minutes we hit the previous day's high. We also hit a 1 hour. So we put in intention for up. So at 3 a.m. we see a bullish candle before 10 minutes. I told you expect cleansing leg 10 minutes. Yeah, it takes out early buyers at the 10th minute. After the 10th minute, count two bullish candles, go long. Exit at 3:30 or cash. London is tricky. At 3:30, it immediately gave us a turning point. It is depending take by side. it comes. Remember, we had 1 a.m. was right here. We have sell side below. Now, this is what land does. Now, at 3:30, we go floor. We take out everyone who has been going short, very short profits. So they are sleeping, they are buying shorts. We go higher. Notice how we again fail to take out this guy and we drop lower, but fail to take out this liquidity right here. This is how the algorithm builds liquidity. It is building liquidity for what? For a New York session. So notice this entry. I told you when we open, hmm? I told you to mark the highest high and observe what happens when we take this liquidity. When we take this liquidity, are we willing to displace and form a gap? No. Why would you sell? Hmm? Because you didn't have a confirmation in the past 5 minutes to sell. Wait after 10 minutes. After this liquidity has been taken, we have a bullish candle. We have a second bullish candle. That is bullish. Means we have this business we are living down here is not for now. I didn't take this trade, I was general following all my models. So you want to read all this. So now if this trade is confirmed at what? Around 13. I told you to expect the stop hands at the 20th minute or the 30th minute. Okay? Now, once we close above here, you can go. Because we have not taken this buy side, this is at 220. I told you expect a stop hand, which is happening here. Take out over leveraged buyers. The moment we close above this gap, like I told you, hmm, we are up in the gap, accumulating more positions. For you, wait 230. 30, you can go long even. Yeah. And add more. How much you see we close above? I want you to observe all this information. Remember, stay with me. We failed to take 3 a.m. lows. Also, this was building a narrative for New York. On a higher time frame, as London, we were absorbing orders from retailers. That that went along with the market for morning. We leave a lot of relative because now going to New York, this is our trigger for buyers. This sale program starts early, let's say by 5 a.m. or 6 a.m. If we have old highs, we go above the old highs and smart money sells orders to the retailer above that. So I have just told you. At 5 a.m. we take London highs, we immediately confirm the short. These are explained the shorts. I'm just telling you the same thing. Targeting 3 a.m. lows. But I want you to notice what the market keeps doing. It keeps leaving the lows untouched, building up for New York. I'm not kind of over big like this. So this is a trade I explained in the previous minutes. You can go back because I took this trade, was taken out. Remember I keep writing. So phasing leg sold at 6 minutes after 10 minutes and a displacement sell after 10 minutes. So sold here. I keep telling you, look at this. Like I have told you these things. Repeat, look at this gap. Assuming you wanted to get along with this move and you know that you have all the liquidity below, you just wait for break below this gap. Like I have clearly illustrated it to you. Like you wait, did we fill this gap? Where there is just becomes an inversion. And what makes my you have displacement 10 minutes. Notice all the moves. If you can wait 10 minutes after the hourly open, check your trades. Hmm. Some people say trade the mark from 10 minutes. Me, I'm saying stay out of the mark. You either trade after the mark. Because look at all my trades. Look at this mark 650. There is not, maybe the macro has changed. Yeah, I trade after 10 minutes. You don't trade in 10 minutes. After the market, now finally we took that 1 a.m. closer. You notice this graph. I told you that when we come here, fail, close below is sell. You want to see this placement below. You could be a seller here, but targeting this low. Now notice this long position, which happened immediately. One, two bullish candles. I count those two. And the inversion, look at the speed with which we close above this inversion. What more, what confirmation are you waiting for if you see speed through an inversion, leaving this place? What more confirmation do you want? I get this idea. You have a movie, you will miss out. So going into 9:30 because of what London had done, we had either lows below. 9:30 just dropped one, two. If 9:30 drops, I expect a stop hunt at around the 9:40. And if there is no stop hunt, I will sell this market at around 9:40. Exactly what I did. Notice I knew that market moved. Sure, I was also taken initially on yesterday's trading. It is me trying to follow the rules and stay within my comfort. So that I am I will keep refining my rules. They're the ones that will help me stay out of greed, guilt. This is where I saw it repeated here. Now, people were buying. I sold more here, I sold more. I kept selling this much. Why? I think by now you know the answer. If you have been taking notes, hmm? You have been taking notes, you know that. What do you think the answer is before I say it? Why did I keep saying this much? It is because I don't know the bank as of now. The market has been dropping, but I am reading price action. I'm looking at all these signals. I'm still telling you we are going where I sold here. I did not buy. Why did I buy? I was aiming for this level here, which we actually know this new week opening gap. It is because I am not a macro trader. You see this gap, we went up, filled this gap. I told you when we closed below such a gap, we saw back. At 10:50, we had just taken profits. This is not a reverse. And I told you as then a reversal can happen. I also fail and totally fail. I told you to wait for 10 minutes. Okay. So we have a nice reaction, but here we had this rolling technique. We put in a graph here, and on this other graph, assuming the people who were reaching to buy value, we closed the above, but remember it is 6 minutes, and I said at 10 minutes, we expect cleansing plague, check out early buyers. But the way we dropped up, we didn't show our intentions of going up. When I saw this, I knew we had it. The minimum we could reach is the 10 a.m. loss. I am going in, I have to be break even by the time we break this low. So I should have gotten break even before we did break this low. We this place below at 10. Expect the stop count as 20th minute. Exactly the 20th or 30th minute. Then you could add your shots. If you only target these rows, your trade will already be on point. If you hold for more, well, I think I've really talked so much. The same things repeat. 11 a.m., same story. We open, 10 minutes, nothing. Now, this is important. This is a balanced price range. I said, if we are to drop lower, I don't want to speed in this gap. When we fail and we see consolidation in this gap, smart money that accumulating longs will go to that. Here we add SM2 with the ES, and then this move stop there and then drop high. Now, this one is when I think I lost. I had overtraded and compared. I couldn't trade the market anymore. I'm not understanding this quite actually. But this one, I rallied long. I should have taken this long, but it did not bring in any of my models. Look at it, 12 a.m. because I was expecting the reversal to happen at 12 a.m. This showed us that the reversal is in place. I expected 12 a.m. to close above this high before we drop and take out early buy. But instead, we just consolidated for the past 20 minutes. In such a case, if there is no confirmation in the past 20 minutes, wait for the past 20 minutes to end, like here. On the 20th minute, if you see intentions to go up, then that is the direction of the market. So that is something I keep learning. Here I tilted, I sold, I bought, I lost myself after I've taken a loss. So it is very important to stay away from the charts for some time when you take a loss. But had the entire tilted, my same thing here is happening. We have buy side is taken. Look at this. Look, see, you see what I see. I see them everywhere. And this is 140. 140 we can sell, but this is version of 140. We've taken buy side, hmm, and we show intention to go lower. Now this means that the next hour will be in this gap and see this display 7 years. 5 10 minutes after, you can wait for the next hour. If this trade fails to reach this low, your stop loss should be at least above this value. So that is why it is good to wait. Like now, in such cases, I wait for this hour to open. It shows bearishness. The moment you can get places below. This is like double bearish signal. So have a bearish candle, slow retracement, and bearish drop. This is a graph up. I told you that first 10 minutes, you do nothing, and the 10th minute, sell. So this is a trade I would have taken, but when you overtrade the emotions that how they we come and yes, now take profit. Then later come. I think that is it for now. I hope you learned something from what I'm showing you. So once you master the entry signature, you master the time you're supposed to enter the trades, you will literally be in and you said you move. So time-based setup. I wish you good luck and good trading. Bye for now.